Safe investments. Many times people wants to invest, but they will be under confusion where to invest, when to invest, how to invest, and that confusion leads to delay in or postponement of investment. There are a number of opportunities, number of sectors which needs investments, and invite investments from everyone, maybe individuals or from corporates or from anyone. And it is the prime responsibility of every investor to select the best one which gives him the benefit of safety, income, liquidity of the investments made. So with these preconditions, the investor wants to select the best one suitable to him, meeting his requirements of amount of investment and period of deposit and maturity requirement. Maturity commitments are his long-term period planning, financial planning. What are the options available for a person as safe investment? Generally, people feel that any investment which is supported or guaranteed by the bank is considered as a safe investment. So people tends to invest, especially senior citizens who are dependent on income from the savings, and the people who wants regular income, who doesn't want to take risk, wants to go for the investments which are backed by the government or banks and financial institutions. So what are the venues where the people can invest, which are considered to be safe investments? The first one is Public Provident Fund, PPF. This is the government backed investment scheme, which is having a lock-in period of 15 years, and this PPF will give higher rate of interest like fixed deposits with banks and other institutions. Also, the rate of interest is higher than interest, obviously more than the interest offered on savings account from a bank. Next one is National Pension Scheme, NPS. This is also backed by the government for retirement benefit for the people who are retired and they want to invest their money under this scheme. The scheme is managed by the Pension Fund Regulatory and Development Authority, and this is a combination of many options, that is liquid funds, fixed deposits, corporate bonds, and various schemes are available under the National Pension Scheme. According to the requirement, the investor can select any one or more methods depending upon his period of deposit, requirement of withdrawal, maturity requirement, his income expected, and maturity requirements. And next one is Equity Linked Savings Scheme, ELSS. This is the Equity Linked Savings Scheme and Mutual Fund Scheme covered, also gives benefit of income tax under section 80C, and the deposit period is only 3 years. This is the shortest period saving based investment schemes, and also there is a benefit of price fluctuations in shares and units of mutual funds, along with there is a possibility of higher income also than the rate of interest. So there are two benefits of this scheme. One is tax benefit and another is growth benefit. This is moderate for people who wants to go for longer period investment and they are ready to take some amount of risk. For those people, this is one of the better option for investment. Next one is, the popular one is bank fixed deposits. Everyone can open a bank account, and a fixed deposit also can be made even with small amounts with any bank, any cooperative bank, scheduled bank, commercial bank, public sector banks. Any bank can accept the deposits from the depositors, and the rate of interest is higher than the regular savings bank account. Also, there is one more option is there in bank fixed deposits, that is tax saving scheme. That if you deposit for 5 years, you can get the benefit tax saving along with other benefits. Also, there are some benefits given to senior citizens of higher rate of interest to senior citizens, if possible. One more question comes, when anyone can withdraw the amount before the maturity period? Yes, it is possible. You can withdraw the fixed deposit amount from the bank whenever you require it, but there will be some premature charges will be there that will be deducted from the payable to the depositor at the time of withdrawal. And one more, the most popular option is for Indian citizens is gold. Every Indian feels to have as much gold as possible. It is a pride for every Indian individuals, women and families to possess as much gold ornaments as possible. This is a traditional investment method for Indians. And gold investments consists of jewelry, coins, biscuits, bars. It is advisable to have investment of gold only in jewelry, but not in idle assets of coins, biscuits, bars. Also, alternatively, now the investors can go for ETF or gold sovereign bonds issued by the government of India to accommodate, to provide the quantity of gold bond issued by the government of India. Next one is recurring deposit. This is also one of the best method of deposits like fixed deposits, but in this investment option, the depositor will deposit the money in regular intervals, maybe we can say weekly, monthly, quarterly, half yearly, like that. And that amount will carry interest depending upon the date of investment. That is one of the better option, so that you need not go for investment of large amount, but you can gradually, you can make a big amount with small contributions regularly or occasionally or according to the convenience. In addition to this, all the schemes of deposits, maybe recurring deposits, PPF, fixed deposits, equity linked savings schemes, national pension scheme, all are eligible for security as collateral security for the loans. And in addition to that, there are many central government backed investment schemes are available, like national savings certificates, and many of the central government and state governments are also issuing bonds or guaranteeing bonds, units, government corporations, government enterprises, or PSUs or CPSEs, public sector undertakings, or central public sector enterprises. So all these options are available to investor as one of the best, safest investments. We cannot say 100% safety, but until now there is no case of default to depositors by any bank. There may be delay, but even if there is a situation of closing the bank or merging the bank, there may be delay in repayment of deposits, but there is no default to the depositors on repayment. Even we have seen recently PHC Bank, Cooperative Bank, that is also, and First Bank, Yes Bank also, the deposits were delayed for some time, but after that the deposits were repaid to the depositors. There is no risk to the depositors. There may be risk to investors in shares, but not investors of deposits. So the above said safe investments, recurring deposit, equity linked savings scheme, national pension scheme, provident fund, public provident fund, bank fixed deposit, and gold. These are some of the safe investment for an investor to invest and to with safety of the investment, income thereon, and liquidity facility available to the investor at his convenience. Also, if possible, the investor can avail loan on the security of the said deposits as a collateral. These are benefits available to the investor. And also the governments and banking financial institutions invite investments, even if small amounts, to larger amounts also. Of course, there may be a ceiling to avail the tax benefit or additional benefit, but generally there is no ceiling for investment by an individual in the banking sector. These are some of the best investment opportunities for Indians.